Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
UTI Nifty Next 50 Exchange Traded Fund ETF. Young today, powerful tomorrow. In cricket, like any other sports, catching the talent young helps to create tomorrow's winning team. Similarly, when it comes to investing, selecting good stocks young today might help you create a powerful portfolio for tomorrow. There is a very high probability of players who have performed consistently well at under 19 level to represent the country at international level. Similarly, the stocks that perform in Nifty Next 50 Index have higher probability to get into the bigger league, that is, into Nifty 50. But selecting tomorrow's winners is not an easy task. So instead of trying to pick next winning stock, let the market manage your portfolio. What's the Nifty Next 50 Index? The Nifty Next 50 Index represents 50 companies from Nifty 100 Index after excluding the Nifty 50 companies. These are established companies and are amongst the top companies in their respective sectors. It includes companies like Britannia Industries, Siemens, Titan, LIC Housing, P&G, Colgate-Palmolive, to name a few. These companies have created tremendous wealth for its investors consistently and have been able to grow their businesses over the years. These companies have a proven medium to long-term track record of good fundamentals. And as most of these businesses offer scalability and are very agile to adapt to the ever-evolving and unique business models, they offer better scope of growth. Finally, these stocks have rewarded its investor quite well in the past. Let us take an example of Lupin that entered Nifty Next 50 Index, grown there and ultimately became part of Nifty 50. Lupin became part of Nifty Next 50 Index in 2004 and was later included under Nifty 50 Index in 2012. During this period, the stock rewarded its investors handsomely, wherein their wealth grew by massive 793% in absolute terms or 32.4% in annualized term. There are many such stock stories. To name a few, companies like Bosch, Vedanta, Bajaj Auto, Dr. Reddy's Laboratory, etc. created tremendous wealth for its investors during their journey from being young to powerful. While on the other side, during this period, stock like Apollo Hospitals Enterprises, Tata Chemicals, MRF, etc. underperformed and automatically moved out of the index. Quite astonishing, isn't it? Such individual stock performances put together have helped the Nifty Next 50 Index to perform well across various time frames. To get better perspective, we compare the performance of Nifty Next 50 Index against the large cap and multi-cap mutual fund categories over multiple time frames. For our study, we considered 1, 3, 5 and 10-year period wherein Nifty Next 50 Index have consistently managed to beat these categories' returns by decent margins. Assume you invested Rs 10 lakh each in Nifty 50, large cap and multi-cap mutual funds category. After 10 years, your investment value in large cap category would have been around Rs 1.2 crore as compared to Rs 2.6 crore in multi-cap category and Rs 2.87 crore in Nifty Next 50 Index. Amazed? Want to invest in such young companies identified by market itself today that have potential to be powerful tomorrow? Invest in UTI Nifty Next 50 Exchange Traded Fund ETF that offers liquidity of a stock as it is traded on the stock exchanges. Diversification as invest across stocks and sectors. Market managing your money that ensures that underperformer moves out of the index and outperformers stay in the index or move to Nifty 50 in future automatically. ETFs are passively managed and it removes individual investment style bias, thus reduces systematic or active risk. Hassle-free and emotion-free investing provides discipline that helps to closely track and benefit from the index performance. Finally, it has low expense ratio as compared to similar ETFs and other actively managed funds, which may help earn better returns, which is the icing on the cake. So what are you waiting for? Invest in the UTI Nifty Next 50 ETF right away. And don't forget, NFO opens on July 18, 2017 and closes on July 28, 2017. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund Family.